today I'm going to be looking for a possible break above the highest high of yesterday, or to be more precise, the high a break above and close above the 1279 level. And if that happens on daily time frame, I will look for buy opportunities, and my buy opportunities will be limited at 1300 level. However, though, the main entry that we might see, because again the buy order would only be activated if on daily time frame a candle closes above the 1279 level. Meanwhile, if we see just a test and reversal backwards, it is very likely that we would be selling gold from 1284 level, and it is going to be quite a high profitable entry overall. We can expect at least so. The fact that 1284 level falls onto 261.8% Fibonacci retracement zone. And currently as well, if we see a break below 1264 level, we should be aiming for short orders as well. So we have basically two aims for short and only one aim for long on gold, because of the fact that we have reached to the significant resistance level, at least for the time being. The targets that we might want to discuss, the first and the main target for short gold orders would be 1254, and then last main target that we could be aiming for would be 1245-46 level. That's going to be the main one. And if we are looking for a sell stop order that we just discussed, a break below 1265 level, that makes in total close to 200 pips of bearish movement, or from 1284 level, that makes well, 390 pips of bearish movement. Now let's move on to crude oil. Crude oil yesterday first made a low, etc., and then we have seen the market getting on the bullish side once again. So the main thing that I'm going to be looking for today is going to be the 38.85 level, which is basically the 138.2% Fibonacci retracement zone. But I would not be placing a sell limit order there. The sell limit order that I will place for the coming basically 2-3 trading daily sessions will be at 39.31 level, and I will really be becoming bearish from that level. My targets from that level will be initially to the level of 37.85. Basically, it is close to $2 movement, but the most important target that I will have will become at 35.77, and even possibly go down to 34.45 level. And if you look at it, it's a massive potential opportunity out there. So the sell stop order for crude oil will be at 39.31 level, or 39.35 level that we should be looking for. The reason why I'm looking for bearish orders is because of the 161.8% Fibonacci retracement zone. If you are going to be entering that level, by the way, your stop loss should be, well, a little significant, close to $1 stop loss. And the reason for it is because we have 200 moving average as well at that level. And overall, why I'm really looking for short orders, while the market is going bullish, is because of the fact that we have a divergence over here. My main important Fibonacci retracement zone is giving me the signals that I should be really looking and taking into consideration. And if we move on to daily time frame, we can see that, okay, over here, because of the feeding, I'm missing a section over here. But if we look more in details for this section over here, you would see that there is a major resistance level at 39.30 level historically. Moving on to Aussie dollar. Aussie dollar is not really moved by ECB, so you wouldn't see much of a movement for it. But on weekly time frame, let's look at it as we discussed earlier this week. We said that a break above the highest high of last week's candle, which was at 0.7440 level, a break above it will bring further bullishness, and I'm keen on that view so far. And if we go on daily time frame, we can see that that's gonna be basically holding up. A break above 0.7440 level that we were discussing, the level over here, is gonna be going bullish, and our targets still remain on the bullish side, and the targets are gonna be ending at a 0.7590 level at the 38.2% weekly Fibonacci retracement zone. Until then, we will not really change our bias or targets, for the fact that the market is anyway on bullish move. On every time frame, pretty much all the moving averages are showing upwards. There is not really lack of, or significant lack of bullish momentum yet in the market. On GBP USD, despite the fact that there is the Brexit fear in the market, we are looking into further, even further bullish development for now. If you remember what we discussed last week, we were talking that the main target for crude oil, GBP USD, stands at the intersection of the two trend lines, as well as the middle point of 61.8 and 76.4% Fibonacci retracement zone. So that being said, we are actually looking for possible short orders from 1.4444 to 1.4475 levels overall, and your stop loss should be just above 1.4520 level. And the targets, that's the main part. The first target that we will have is going to be at 1.4334 level, just somewhere over here. And second target that we'll have is going to be at 1.4185 level, and the third and main target is going to be at 1.3995 level, and this is going to be the pretty much it. It makes a total of more or less from that level 480 pips movement, and I believe it's a significant market move. Moving on to euro dollar, the problem boy. We said that euro was sick yesterday. So back to it, we can see that the market has hit 161.8% Fibonacci retracement zone. This Fibonacci, I had to draw it on daily time frame. Basically, I combined the daily high of 26th of February to the daily low of 1st of March. And we can see that that was indeed a major support resistance level. So the resistance at 161.8% acted strong. Currently, the pair is moving below the 138.2% daily Fibonacci retracement zone, as well as 61.8% weekly Fibonacci retracement zone. So the target for now remains all the way towards the level of basically 1.1040. That's the daily 88% Fibonacci retracement zone. And if you look backwards, you would see that this was a daily resistance level as well for the last 3-4 days, or even 5 days. So we look into the market to touch this level, and from there onwards possibly reverse upwards, but we will not be trading this pair today, probably not even on Monday. We want to see what's the real outcome of the market movement, because so far in one day yesterday we had close to 400 pips market move on euro dollar. I see some people are asking about New Zealand dollar. I'm going to very briefly go through the New Zealand dollar as well. So New Zealand dollar so far is being capped by the 50-week moving average, and the preferences are on the bullish side. If you move on daily time frame, we can see that the market is above the 50 and 200 moving averages, although both of the moving averages are sloping downwards. So there is a likelihood that we could see the trend reversing. But in order for us to consider bullish entries, we need to see the market to break above the 0.6755 level. And it's because basically at the 0.67 level, we have the 61.8% Fibonacci retracement zone and the falling trend line over there. So we need to see this level to be broken above in order to get the push on the bullish side. And my initial target is going to be towards 0.6888 level, and then 0.6955 level, which is respectively 100 and 110% Fibonacci retracement zones.